Direct Connection is made by MPT to serve all of our diverse communities and is made possible by the generous support of our members. Thank you. Live from Maryland Public Television, this is Direct Connection with Jeff Salkin.
Good evening. Welcome to your Direct Connection. Tax Day is coming up. And tonight we have expert answers to your questions about getting all of the deductions you are due. Joining us are Rob Bader, Director of Tax Operations for the Cash Campaign of Maryland, and CPA Rudolph Isaacs of Isaacs Accounting. Gentlemen, thank you so much for being with us. Our viewers know it's been a really heavy start to the year. We've been talking about Ukraine. We've been talking about COVID. So we thought tonight we would lighten the mood by talking taxes. We appreciate your help with that. Let's start, Rob, with the thing that you're seeing that is confusing the most people this year.
So you're kind of making a joke, but actually this is a positive time when you talk taxes. And it's part of that, there's some confusion around it, but the result is a good thing. There are many credits and what have you that have been changed this last year and expanded so new people can get them. And so that's the biggest challenge we're seeing, is just making sure that people are getting the right earned income credit, child tax credit, and daycare credit. Daycare credit, for example, has expanded quite a bit as well. So especially people with kids, and then also people without kids, they're actually getting a lot of benefits as well. And so I'll talk a little bit more about that in a bit, but making sure that they get earned income tax credit as well.
Rudolph, in your practice, what are the big sources of confusion this year?
Well, this year it's really around the stimulus funds, the third stimulus that came out in March or April of 2021. Whether that is income or not, it's not income. But it still needs to be reported on the tax return. So a lot of taxpayers believe it doesn't need to be reported. They're confused about it. And then the other area is the advanced child tax credit that started out in July of 2021. How is that reported and reflected on the tax return? A lot of taxpayers aren't aware of that or sure about that, and that's really confusing, because if we don't report the correct information to the IRS, it could delay processing of the returns, and then the IRS will make adjustments to your returns because that information was inaccurately reported.
One of the confusing things as a taxpayer is the IRS already has all the information, don't they? So I know some other countries do this process in reverse, where the tax agency takes what they know about you and sends you a provisional return. I don't know, might make more sense.
Yeah, that could be helpful.
The IRS has most of your, sorry, go ahead.
Yeah, that could be helpful for some taxpayers. So I do agree with that. But as far as it goes with the advanced child tax credit, which is new, and it really came out because of the pandemic, taxpayers did get notices of that. The third stimulus was probably a little bit delayed. I actually had a few clients that didn't receive their information about the third stimulus until maybe the middle of February. So that adds to some confusion for taxpayers.
What if you're in that situation and you got the form and you can't find the form? What do you do?
Yeah, we advise our clients to actually go to their bank statements, because many times those were direct deposits. So they can find that information there on their bank statements, or they can go to the IRS's website at irs.gov and create an account there and pull the information down from their account once they create one at the IRS's website.
Rob, tell us about the Cash Campaign, 21 years now.
Yeah, it's been a long time. It's been I've been around for a long time as well, and it's been an interesting work. The CASH stands for Creating Asset Savings and Hope, and one of our biggest programs is the tax program. We have sites around the state, 19 counties, I believe, in the state, and we have staff and volunteers that prepare free tax returns for families with income under $58,000 a year. And we're IRS certified. All of us have to take it, or get to take a test every year that the IRS provides that we take. And so it's a nice, safe place to get your taxes done. And we also have other programs as well, like financial programs, like benefit screening and financial education trainings and what have you at the sites as well, with Cash as well.
Early April is probably a little bit too late to be making appointments. Tell me if that's the case. And for both of you, start with Rob. If somebody isn't going to be able to file on time, what do you do?
So we have our tax, you're just saying it's a little late, and our appointments are booked through the end of this tax season. We do have access to free online tax software. So if you feel comfortable and competent doing that, you can file your own return using free software if your income's up to $73,000 per year, and that's for certain types of returns. So you can always look at our website at bemorefreetaxes.org, and again, that's bemorefreetaxes.org, and go there and you can find free software there.
Rudolph, for people who have never filed an extension, I don't think I've ever filed an extension. I'd be a little bit leery to do it. Like you're either violating some unwritten rule or you're calling attention to yourself. How do you tell clients to think about that?
Well, I pretty much file an extension for myself every year because I'm trying to get everybody else's tax return before I have opportunity to kind of really do mine. But an extension is really gives you the opportunity to really gather your documents if you're not able to file by April 15th or April 18th this year. It gives you time to file, but not time to pay. So we really want to make sure that taxpayers are aware of that. All monies are due to the IRS and state by April 15th, 18th this year. And actually for the state of Maryland, I believe the deadline for getting that information in or getting your payments in is July 15th, 2022. But with the extension, it gives you time to file, gives you time until October 15th of every year. But all monies are due to the IRS by the 15th. So if you can make it, if you believe that you owe, you want to try and get an estimated tax payment in or pay something in with that extension, that's helpful. Because if you don't make that payment, there are going to be penalties and interest assessed for late filing. But if you think you're going to owe, you definitely want to do an extension. If you don't owe or you routinely get refunds, you don't really need to file an extension because a penalty of 0 is 0. And so you really have 3 years to file your return if you do a refund in order for the IRS to send you that refund.
Let me remind our viewers, if you have a question for our tax experts, you can give us a call at the number on the screen or send an email to livequestions@mpt.org. Gentlemen, I wanted to ask you about, people have been through a lot the past couple of years, recession, there have been stimulus payments, some people had to spend it, some people were able to save a little bit. Now unemployment coming down, inflation going up. What are you seeing? Rob, first, when you talk to clients, how's your average client doing financially?
Well, our clients, it's across the board. We do have a lot more. Last year, we had many more clients who had unemployment. I'm seeing, I haven't checked data or what have you, just generally see fewer unemployment returns. So I guess that's a good sign. But people should be aware, though, that unemployment, for example, last year, in the middle of the tax season, the IRS said $10,200 of it was not taxable, and the state said none of it was taxable. This year, all of your unemployment is taxable. So if you're racing to get your tax returns done in time and you have unemployment, expect you're going to have to probably pay taxes on that unemployment, at least on the federal return.
Let's grab a phone call from Howard County. This is Deborah. Deborah, thank you for the call. Go ahead.
Yes, I'm contacting you to ask about the seniors getting the tax break starting July 1st if you've been in your home for 36 years. How and when do we apply for those?
Deborah, you're not talking about the new Maryland law that passed the General Assembly, which would be for this year, for the filing you'll do next year, right?
Yes.
Okay, gentlemen, your thoughts. What do we know? I don't know if we know anything about the details yet.
We don't know much. Well, I've read the law and what have you, and I think I'm going to wait a little bit further for the comptroller to kind of give more guidance. But it does look like there's a non-refundable credit that's coming for seniors, and a couple other pieces to that legislation that came out. I think it was signed on Friday.
Email question: has the IRS resolved its processing backlog? Been reading about that. Sounds like they got a lot of paper stacked up.
Yeah, I don't think so yet. I think they have a goal in mind of trying to get a lot of these back to delayed returns processed by the end of this year. But I think they are still having processing delays and trouble, especially if you're doing things by paper. My advice to my clients is to try to do your returns electronically. If you do have to send in a payment to the IRS, you can go to the IRS's website or the Comptroller of Maryland's website and make those payments electronically so that you make sure that they get them relatively quickly and on time. But anything that's being done by paper is still being delayed.
And even online returns, if you file online, if for some reason, most of the IRS processing is done by computer, but if for some reason the IRS touches your return, if there's like a human has to look at it, it will be backed up. And I can't say how long that'll be backed up. Last year we had people didn't get refunds for 6, 8, 12 months, because they filed electronically, but something was incorrect on the return, especially the stimulus money, like Rudolph was just mentioning. A lot of people don't know how much to put in, how much stimulus did they get, how much, and they can't remember, especially after 2 years of stimulus payments, advanced child tax credits. It's kind of hard to remember what you received this last year. So make sure you put in the right amount.
Are some of those delays potentially tied to identity theft cases where somebody's social security number has been compromised and then the IRS, I don't know if they put some sort of flag on the account, but would that slow it down?
Yeah, at times that will slow down the processing of the return if there is identity theft. If there has been and the IRS is aware of it, many times they'll issue the taxpayer a PIN number that needs to be included with the future filings of the returns. And every year the IRS will send that taxpayer a new PIN number, and they can even request one on the IRS's website. So that if there is identity theft, that could delay the processing of the returns. But I think most of the delays is really related to the pandemic, maybe agents working from home and not being in the office, and the IRS not having enough staff, because a lot of changes occurred, as you mentioned earlier, as a result of the pandemic. And we're still feeling that now with the IRS.
Phone call from Baltimore. This is Cindy. Cindy, thanks for the call. Go ahead.
Yes, I didn't work last year, so I didn't get a W-2. But I've been told because I have a house, I still need to file taxes. I need some help on that.
That's a great question. Thank you. Rob?
Thank you.
Just having a house, you're not required to file a tax return unless you sold the house, for example. Then possibly, then you do need to file a return. But just unless Rudolph, do you know? Unless you know.
No, I agree with you, Rob. Yeah. If they don't have a W-2 and they don't have any other sources of income, no unemployment, no 1099s for businesses or anything like that, and it's really just their primary residence, that's the only thing. They don't have to do an actual income tax return. But sometimes taxpayers can get what I believe is referred to as the home tax credit or something along that line, where they can get a reduction of their real estate taxes. So they may need to file that form, and but not an actual tax return.
How about for some of the credits that you've been talking about?
If they can get refundable credits, like maybe the advanced child tax credit, could sometimes be a refundable credit. I'm not sure about the earned income credit. So, but if there
the earned income credit, yeah, the earned income credit, there could be a good reason to file. Maybe you didn't have any earned income last year, which would generally make you ineligible for the earned income tax credit. But if you worked in 2019, they have a look back, and you can actually look back to your 2019 income, and that'll actually give you the earned income tax credit. So as long as you have earned income, you can get the earned income tax credit. But if you didn't work in 2021, that's okay. As long as you look back at 2019, you can use that income from 2019 to calculate your return and get the credit.
Rudolph, you mentioned how many people are working from home. How many of your clients have been working from home and say, hey, Rudolph, how can I take a home office tax deduction?
Yeah, that's a great question. Back in 2018 with the new tax laws, that pretty much went away for the home office expense. It used to be reported as an itemized deduction subject to 2% of your AGI, adjusted gross income. But with the tax laws of 2018, that pretty much went away. So individuals working from home, it's not really going to be a benefit to them. But if an individual has a business, a small business that they're using, and they have a home office, There are certain rules around that where they have an office that they are exclusively using for business. They can take the home office deduction. So for businesses, yes, but for people that are just telecommuting for their W-2 employee work, then no.
Phone call from Anne Arundel County. This is George. George, thank you for calling. Go ahead.
Thank you. Well, I'm trying to submit my first quarter quarterly estimate of taxes, and the online state service has been down, and I guess our controller has been too busy campaigning rather than getting the computer working. So I'm wondering, do I need to find a paper copy to submit my estimated payment, or would I perhaps finally be able to do it online?
George, thank you for the phone call. I'm picturing the comptroller running the computer system there. Gentlemen, how do you send in an estimated if you can't do it online? And I think the state used to mail them out to people who file those forms and stopped doing it.
Yeah, you can send it in by paper and using the Maryland coupon to send that form in. I believe it's the MDPV form that you can use to send in that payment. You can send it in by paper. But I would suggest that maybe giving the state a little bit more time. Maybe if you're not able to get on that website by the end of this month to send it in, then maybe do it by paper. But it's probably better to do it electronically. And I would just give it to maybe the middle of this month, towards the end of this month, to give them a little bit more time to get that computer working.
How closely do both tax agencies look at the date? When somebody, you said the deadline is the 18th of April this year. If somebody has it postmarked the 19th, have you ever seen a client who's filing on paper or electronically have an issue with that?
I haven't had any experience around that, where if it's just filed one day late, they probably will get a notice from the IRS for that one day. But if it's just really just one day, I would think that interest and penalties will be relatively minimal depending on the balance due. But again, advice to taxpayers: if you owe, file that extension or to try to get a reasonable estimate in to try and reduce any penalties.
Right. And for the record, we're not telling anybody to file late. Back to the phones. Anne Arundel County, Regina, thank you for calling. Go ahead.
Hi. This is my son's first year filing taxes on his own, and I received the stimulus last year. So when they asked him this year, did he receive the stimulus, does he say yes?
Says no. He says no. One nice thing about this, is he able to claim himself?
Yes, he's going to claim himself this year.
Yeah, the nice thing about the stimulus, it's one of the few times the IRS doesn't have like the one body rule, or the rule where you just can claim one thing once. If you received it last year, he would actually, but he's able to claim himself for 2021, he'd actually get the stimulus. So he just says he didn't receive it, and then he'll then get the stimulus on his return.
Thanks so much for the phone call. And I apologize for getting too deep in the weeds on this next question, but it concerns the standard deduction and itemizing deductions. And this changed in the last tax law change, where the standard deduction went way up. So it's pretty clear for most people that's what you're going to do, and that'll save you money on your federal return. However, the state of Maryland requires you to make the same election on your state return, which can wind up being really disadvantageous there. How often do you see that situation? Because on the tax software I use, there was no advice on that at all.
It's pretty frequent. It's pretty, if you have, especially if you have a house, charitable, like major charitable donations, or medical bills and what have you, it's good to try that. And often the software, it's just a button, like you put in all your itemized deductions, and usually, because like, for example, the standard deduction, I think it's like $12,800 for a single person, is so high that your itemized deductions is hard to get that high on the federal return. But the state standard deduction, I think, is between $1,500 and $4,500. And so it's a very low deduction. And so it often does work out quite frequently for people to take the itemized deduction, which will reduce the amount of the refund on the federal return, but will increase the state often. Not always, but often will do that.
And related to that, Rudolph, people can make relatively small charitable donations and still write them off, even if you are taking the standard deduction, right?
Absolutely, yeah. For single filers, you can deduct up to $300. For joint filers, it's up to $600. And what that does, it really kind of bumps up your standard deduction. So you can do that if you're taking a standard deduction. You can't do it if you're going to be able to itemize. But yes, you get those little bump ups in standard deduction, $300 or $600. Yes, is the max.
Back to the phones. Catherine in Montgomery County. Catherine, thank you for calling. Go ahead.
Yes, I currently live in Montgomery County, Maryland. I bought and sold a home within 6 months, and I have short-term capital gains of $25,000. Do I need to report that to the IRS or the state of Virginia?
This was you're a Maryland taxpayer.
I'm a Maryland taxpayer, yes. I moved to Maryland after that.
Are you a home flipper, or this just worked out?
It didn't. I was not a home flipper. I actually was going to stay in Virginia, but for personal reasons, I had to sell the home within 6 months and move to Maryland. Well,
congratulations on the gain. We'll get you some advice on the air. Gentlemen?
Yeah, you would have to report that as a capital gain, because I think you said that you were only in the home for 6 months. You intended it to be your primary residence, but you did not meet the 2-year permanent residency rule in order to have that excluded. So yes, if there is a gain on that property, you would have to include that in your return as capital gains.
What's happening with student loan interest? To what degree is that deductible these days?
Yeah, it's up to about $2,500 is the maximum that you can deduct. There are income, limitations there. But again, as you mentioned earlier, with the pandemic, a lot of the student loan interests were automatically, I guess I would refer to it as put it into deferment. So individuals who owed who owed student loans weren't making payments, and so there isn't any interests for 2021. But it is still deductible if you make those interest payments or you have interest expense up to certain limitations.
Rob, a viewer wants to know, does the Cash Campaign file taxes for prior years? And if so, how far back will you go?
We do file prior year returns back to 2018. We only go back to 2018. And again, our sites are all booked right now, but we will start a back tax program in May. So you may want to, if you want to check our website at bemorefreetaxes.org, later in April, we'll have more information. You have more information about that there.
Let's go up to Cecil County for a call from Linda. Linda, thank you for the call. Go ahead.
Hi, I'd like to know when the deadline is for filing for an extension.
Thank you very much. And gentlemen, the best way to do it, send in a form or electronically, or I think maybe it was Rob mentioned before, if they owe you money, you don't necessarily have to do the form, right?
Correct, yeah. If you're getting a refund, you don't necessarily need to do the form. But if you owe, you need to do the form, and you can do it electronically, I believe, on the IRS's website or on the Comptroller of Maryland's website, or you can do it by paper. But I would say do it electronically, because again, with those delays, it's going to take them a while to process anything by paper.
Just make sure you know that you don't owe money,
right?
Because you could be surprised with the late. There's a late filing fee and a late, and then there's interest for not paying. The late filing fee is pretty more damaging and it happens quickly. As soon as April 19th hits, you have that late filing fee. So you want to get that in if you think you're going to owe.
Out west to Allegheny County, this is Lisa. Lisa, thank you for calling. Go ahead.
Yes, thanks for taking my call. PPP1 and PPP2 is a small business loan. Is that taxable from the state, and is it tax-free from the federal?
Thank you.
Well, it's tax-free. It's tax-free from the federal. I'll have to double check on the state, but it is tax-free from the federal. You have to apply for PPP loan forgiveness, so it's not something that is automatic. You have to go through SBA or through your financial institution that you got the PPP loan from, but they are tax-free once they are forgiven.
Gentlemen, just in a sentence or two, give me a little advice for somebody looking for a tax preparer, because I don't think, Rudolph, you're a CPA, the gold standard, but I think anybody can hang out a shingle as a tax preparer with minimal qualifications. Rob, you're shaking your head.
It used to be that way, and but now the state of Maryland requires you to be either a CPA, like Rudolph Isaacs here is, and what's called an enrolled agent. That's someone who's registered with the IRS and has taken a special exam, and so you can find that list on the IRS website. An attorney or registered preparer with the Department of Labor in Maryland, and those
gentlemen,
all Maryland preparers have to take.
We're going to leave it there. I know Rudolph has to turn back to his desk where all the paper is. We really appreciate your time. No, it's a busy part of the year, so thank you so much. That is Direct Connection for this week. We're back Friday with State Circle, the latest on Maryland politics in the last days of the legislative session. Join us then. Thank you for watching, and have a good night.
This program was made by MPT to serve all of our diverse communities.